Hello and welcome to Business Today Television. I am Siddharth Zarabi, and with me today is Mr. Kishor Patil, the Managing Director and the CEO of KPIT Technologies. Welcome to the show, Mr. Patil. We are having a conversation about your latest fourth quarter numbers. A good set of numbers. Revenues are up 42% in dollar terms. Um, Profit has jumped to rupees 112 crore. Take us through the key highlights of your latest performance.
Sure. So first, let me just give a little bit background so that I can explain my numbers well. As you all know, KPIT is really focused only on automotive and mobility, and mainly in terms of their transformation towards SDV transformation as software-defined vehicle transformation. So most of these programs are multiple years, and we have been working with 70% of the large programs. So that allows us better visibility, better pie of this. Also, the fact that these programs are very critical to the OEMs because if they do not launch it in time, they will lose the share of the market. So these are something, if I would say, pretty sticky, and that's where their spend is going up. So based on these we have been working with T25 clients, as we call 25 strategic clients for many years, and out of which two of them announced significant engagements we announced with them in last 3 to 4 months. So based on that, actually, there are two things. We have a very strong quarter in terms of Q4. And of course, we have also a visibility for the next year. So this is a background. Now, as you mentioned, the Q4 constant currency revenue grew by 50% year on year. And the revenue for the year, we grew by 36.7% year on year in the reported format. And EBITDA is at, okay, and quarter on quarter, the growth is pretty strong. I think 8.5% constant currency and 12.1% in terms of reported dollars. And EBITDA is 19.1, which is ahead of, last time it was about 18.56. So there is a significant improvement in all the parameters, and net profit for the year has grown by 39%. Now, the main thing for this growth is, first, it is come on the as I said, on the back of some significant, in line with the strategy. The growth is in line with the strategy. This also gives us a confidence about the long-term visibility of our current business and the growth. And also, it is overall, generally, during this quarter or this, you can see, apart from Asia, you will see it is across. And Asia is where we have announced the significant engagement, which is also, frankly, some part of it is in this quarter, but I think rest will come in going forward. So overall, it is across the region, it is across the clients, it is not come because of one area or the other. That's why it's a very all-round growth in line with the KPIT strategy.
Okay. Take us through some bit of the new orders, the deals that you have won, and how does the pipeline look like ahead?
Yeah. So overall, we only always, as a part of the principle, we always talk about what we have won during the quarter. We have won 411 million or so new engagements during the quarter, which is one of the largest. I may say this quarter is one of the best in recent year, both from the perspective of growth and also in terms of wins we had in terms of engagement. And these are mainly in terms of two main engagement we got, which has been in the public knowledge. One was the Renault, which again, a large SDV program, and we are a strategic partner to them for the SDV program. And it's a very significant engagement over many years. And similarly, Honda, which was the latest announced, and it's a very long-term engagement till 2030. As we start, it will scale up in some time, to about 2,000 people over the period next 3-4 years. So these are all long-term engagement, and which also gives us a little bit also peak in the future and stability and visibility.
Since we are talking about the future, do explain to our viewers about the outlook that you see, because you have centers overseas and you have a feel of how the international markets are performing. What is the overall outlook that you would like to share with us?
Yeah, so we have given an outlook of 27 to 30% growth in constant currency for the next year. And again, we see again a growth in all across the region. We do believe it will be led by Europe, followed by US and Asia almost similarly, maybe Asia maybe a little ahead, and then the US. But overall, it's a strong growth across the three regions. It is not like one is very high and one is very low. Of course, Europe is a bit stronger. So that's how we are looking at it from the next year. But as I said, instead of just looking at the region, I look at my clients, which are the main thing of my focus. And I see a good spend going forward for now and in future. And that's how it at least reflects also in many surveys or reports, which has also come out. And we have been engaged with them, most of them, for last many years. I mean, we celebrated some of the engagement with the client for 20 years, 10 years, 15 years. And so these are long-term engagements. So that's why we feel very good about it.
The guidance for EBITDA margin is estimated at between 19 to 20%, and you had a good expansion of 60 basis points in this quarter. What led to that? What gave us those results?
Yeah. So there are 2-3 points. Now, one is we had a very good in terms of first is our overall realization has gone up overall. Also the mix of revenue has improved in our favor. So that has really, and of course the growth, which is a strong growth. So that allowed us to really have a stronger growth. The other point I wanted to say is as a strategy, what we do is we have been increasing our EBITDA year on year, quarter on quarter, but mainly year on year. If you look at it, last year it was 18%, now it is 18.9%, and we are saying between 19 to 20%. And in spite of different changes in this, in currencies, etc., we have been in a position to manage. So basically, what our philosophy is, we improve the overall EBITDA margin in a year, depending, but there will be some improvement. Whether it is 0.5% or 1% will depend upon multiple change things which are not also in our hand. But
absolutely,
and the rest we will reinvest into the business. So
absolutely,
the reinvestment.
No, I was just saying that some of the optimism is also clearly dependent on how the macro factors play out, given that we are in a sort of unusual macroeconomic environment. Some parts are stabilizing, some are not. I want to turn the focus to the hiring pipeline for FY24. I think your global employee count has crossed 11,000. What's the pipeline looking like?
So I think it is. I think I may say that we have a very strong system by which we really have a next 2 quarters typically detailed planning, and based on that we go out and hire. There is of course one hiring which happens in the campus, and the rest then we do quarter to quarter, both lateral as well as some freshers, or freshers means maybe fresher or a 1-year experience also. So I think that is how we look at it. There's a very naturally these are large engagements which we have signed for. So there is a very strong pipeline of individuals we are hiring. We have made the campus offers, but we will continue to look at it. So overall, we see that our attrition has really come down. So that is another one factor in terms of hiring, right? So it is more like a mid-teens. We are around mid-teens, and so that has also come down. And also the ability, the strong growth and the opportunity we give are actually our ability to hire has also gone up, not only in India, but outside. And as you know, we have multiple centers. In India, we have Pune, Bangalore, Kochi, but outside India, we have in Europe multiple centers. We have in America's multiple centers, and also in Asia. So overall, I think we balance it out depending upon the client requirement and how it actually works out in the next 6 months. That's how we work on. But overall, the environment is very positive.
Very positive. Some weeks ago, a brokerage house had issued a report where it mentioned concerns over lower structural margins and the risk from concentration on a sort of single vertical, and also the concentration of clients. How would you respond to that, Mr. Patil?
So the first thing is, I don't like to respond to what is written, because we are focused on our strategy. So I'll give you my view on this. We are focused on a strategy, and we are focused very closely on a vertical of mobility, which has a long-term good spent into engineering. So that is a one point. Our focus is on the leadership, and I think we are arguably globally a leader in this area. So, and that is very, very important to us. So it is not about here and there, but it is about the strong, that part. Also, the third thing is, we are there for a long term. So we do invest. The technology landscape is changing. There are many things which are changing in the market environment. So we reinvest very heavily. We are if I had to say, a tech company and not a services company. So we do invest into technologies a little more than many of our other companies. So, and we will continue to do that. And while we are improving our margins bit by bit. So there are a lot of things in terms of business model changes which are happening at the client. New technologies are coming. So we have to put ahead of time, investments. And we are very happy doing that. So basically, we would, what is important to us? What is important to us is that we are a trusted partner to all our clients. The second is we are the leadership, both in the thought leadership as well as in numbers, size. We are the largest in the vertical. And I do believe the leadership gives you multiple things, because as there is a growth, and that's how it is written everywhere, in any research will tell you that. So then we can maximize on that. And for whatever reason, there is a little bit softness, then we can eat into market share if you are a leader and if you are better in the areas in which you are working. And on the profitability margin, it's a strategy what you can have. Somebody can maximize on that and for short term, and we can, and consistently. We are the two things which are important. We are consistently growing, improving the profitability. And it is a reasonable profitability. Our return on capital is pretty good. So I think I'm very happy with that.
Okay, and that's the most important point: management conviction and the belief in the business that you're doing, which also translates into financial performance and obviously shareholder returns. Mr. Patil, thank you very much for your time and spelling out and detailing out some key aspects of your latest quarter. Wish you all the very best. With that, it's a wrap on this conversation. We'll see you again. Do stay tuned in.
Thank you.
I have 3 stellar members of Corporate India. We'll also be joined by